Foreigners flip dealers of Chinese stocks in July on COVID worries. Overseas buyers turned internet sellers of Chinese shares in July, as mainland inventory prices tumbled on issues that COVID-19 flare-ups and ensuing lockdowns would similarly disrupt economic pastime. Refinitiv statistics showed foreigners sold a net 21.07 billion yuan $3.12 billion well worth of mainland shares in July through Stock Connect, a key cross-border hyperlink between the mainland and Hong Kong exchanges. They bought a net 11.8 billion yuan well worth of shares within the Shanghai Inventory Exchange, and 9.27 billion in the Shenzhen Stock Exchange. Foreigners had offered a cumulative 95.45 billion yuan within the preceding 3 months, in line with the information. Foreign flows into Chinese stocks via Stock Connect. China's factory interest contracted suddenly in July, due to the sparkling emergence of COVID-19 instances, with its reputable Manufacturing Managers Index falling to 49 from an analyzing of 50.2 in June. A reading under 50 is considered as a contraction. Also, a hazard through Chinese home shoppers to halt mortgage bills until builders resume creation of pre-sold homes deepened worries about the debt-stricken assets zone ultimate month, elevating fears banks ought to face hefty write-downs. The benchmark CSI 300 index dropped 7% closing month. Winnie Wu, China equity strategist at BofA Securities, mentioned renewed fears of Chinese ADR's delisting and heightened geopolitical tensions also affected money flows in July. Foreigners have dumped about 962 million yuan worth of China-listed shares thus far this month, as tensions between Washington and Beijing escalated on news. U.S. House of Representatives Speaker Nancy Pelosi changed into set to visit Taiwan. However, Harold van der Linde, NYSE, Lin, head of HSBC's Asia-Pacific Equity Method, stated he had an overweight rating on Chinese equities. Beijing has shifted its policy tone from de-risking to being pro-growth, and rules like putting in the real property fund ought to appreciably reverse the investor gloom, he mentioned. In addition, foreign institutional traders are normally underweight Chinese equities, so if there are enhancements, they have got lots of room to feature to their positions on this marketplace. Meanwhile, Chinese buyers purchased approximately $405 million well worth of Hong Kong shares through Stock Connect in July, which turned into their smallest internet buying on the grounds that November. Southbound flows into Hong Kong shares.